is a system of budget where the senior managers or the top management of organization are allowed to participate in the budgeting process is called, which means the lower levels of managers are not allowed to participate in that budgeting process is called the top down, which means it's only the top manager, the CEO, the chief financial officer, are allowed only to participate in that budgeting process. The lower level of managers are not allowed to we call the top down. So from the name, please, then of course you be able to know the advantages and disadvantages of that. Then of course the second one is what you call the bottom up. Now from the word bottom up, which means another word for bottom up is what you call the participatory budgeting system, which means this is a system of budget whereby the top management are allowed to participate in the budgeting process, which means whenever a budget want to be planned or want to be prepared in an organization, also it's not just the top management are allowed to prepare. Also, the lower level of manager are also allowed to participate in the budget process. So that system of budget is what they call the participatory, or you call it the bottom up system of budgeting. Then of course the third one is what they call the zero-based budget. Now when we talk about zero-based budget, a zero-based budget basically is that system of budget where all the organizational activities has to begin from the scratch, or has to begin from what they call a zero base. Which means it's a system of budget that requires that all budget amount currently be justified, even if they are supported in the prior budget. Which means in this case, every activity, every cost, every revenue must begin from the scratch, must begin from zero base. Which means in preparing a budget for a particular period, we don't consider the previous year budget to prepare the current year budget. Every activity must be justifiable from the scratch, must begin from zero base. So it's called what they call the zero base budget. We don't use the previous year budget to prepare for the current year budget. So that is what they call the zero base budget. The fourth one is what they call the incremental. Now, incremental budget is a system of budget prepared, which means the current year budget is prepared based on the previous year budget, which means a particular percentage is added to the previous year budget in order to arrive at the current year budget. So such system of budgeting is called the incremental, which means whenever we want to prepare a budget, in this case, we use the previous year budget to arrive at the current year base, at the current year budget. Which means the last year budget is going to be a basis for the preparation of this current budget. Is called the incremental budget. Of course, there are reasons why, in that case, the reason why, when I say that a particular percentage most of the times is added to the previous year in order to arrive at the current year budget, and all that. So it's called the increment. And the reason why we add a particular percentage so that we can actually take care of our inflationary, this thing activity that occurred during the year, and also the economic recession or economic activities in terms of the downturn, and also in terms of what we call the increase in the price of goods and services and all that. So then, of course, the last one is called the activity-based budget. Now, the activity-based budget, is a budget that is prepared on the basis of several activities that occur within that particular period, which means that budget is prepared based on the organizational levels of activities within that particular period. So these are various system of budget. Now I want to look at what are the types of budget. Types of budget. Here we want to look at what they call the functional budget. That's when I say types of budget here, I mean types of budget according to their financial terms. According to the financial terms. Because we have different types of budget according to their period. According to pay, we have short-term budget, medium-term budget, and also the long-term budget. But here we're looking at, we're looking at the types of budget according to their monetary terms, according to their financial terms and all that. Then number two, we have what we call the master budget. Master budget. So now, let's start looking at what we call the functional budget. Now, when we say a functional budget is a budget of the day-to-day running activities of that business organization. It's called the functional budget. This is a budget of day-to-day running activities of that business organization. That is called the functional budget. Okay. Let's look at what are the types of functional budget. Types of functional budget. Types of functional budget. We have various types of functional budgets. So let's look at now. The first one I want to look at here is what we call sales budget. Sales budget. Now, a sales budget is a budgeted, quantity and the price of goods and services. That is what they call it. It's a projected quantity of goods and services for a particular period is what they call the sales budget. And how do we compute for sales budget? For sales budget equals to, the budgeted quantity times the budgeted selling price. Budgeted selling price. That will give you the sales budget, which means the quantity you intend to sell times the quantity you intend times the price of such products will give you what they call, multiply the two, the quantity times the price is going to give you the sales budget. Yeah. So it's going to give you the sales. It's going to give you the sales budget. So which means, let's assume a company has 2 or more products. Let's assume a company has 3 products. I'm asked to compute sales budget. Sales budget. Product. So I'm going to say product A, B, C. This is sales unit. The sales unit means kind of the quantity you intend to sell. This is the selling price. The price per unit. Then this is sales. This is sale. Okay, this is. So by the time you multiply this time this to give you this, so whatever you have is going to be your budget, sales budget at the end of the period. So that is number one. So number two, types of functional budget is what we call production budget. Production budget. Now, production budget, this is a budgeted quantity of the goods that the company intend to produce in a particular period is what they call the production budget. Which means if a company intends to produce a particular amount or units of a particular product, that unit they intend to produce for that particular period is what they call the production budget. And how do you compute for production budget? Production budget equals to the sales unit, that's the budgeted sales unit, which is sales quantity, you can also call it quantity, plus closing stock or closing inventory. Please, stock and inventory mean the same thing. Of finished product, FG means finished product, minus opening inventory of finished product. That's how to compute for the production budget. The budgeted sales unit, that's the units or the quantity you intend to sell, plus the closing stock of the is the closing stock or closing inventory of finished product. Why? Because raw material is different from finished products. You should know that. Finished products are products that has completed what they call the finishing, the production process are called the finished product. While the raw material are those inventory that they are still at their raw state are called the raw material. So you should know that this one is a inventory. All of them are called inventory. But one inventory is still at the raw state. One has completed the production process. So you should know that. So now, how am I going to complete for that? Now look at now. Let's assume you have three products. So I'm going to say product A, B, and C. The sales unit, let's do sales unit. I'll add closing inventory of finished products. Add it. Then less opening inventory of that finished product. Less it. So whatever you have is called the production unit. That's our production unit. So that's how to compute for the production unit in the production budget. Yeah. The budgeted sales unit, that's the unit you intend to sell, plus the closing stock of the finished product minus the opening stock of the finished product. That's going to give you the production budget. So now let's now move to what they call the third type of the functional budget. The third one is called the material usage, direct material. Okay, direct material usage budget. Direct material usage budget. Direct material usage budget. Direct material usage budget. Now, when we talk about direct material usage budget, this is a budgeted quantity of raw material the company intend to use for the production of the finished product. It's called the direct material usage budget, which means, now remember we're talking about, I talk about what they call the raw material and the finished product. Now, anytime you want to make production, you must have a raw material you are going to use to produce the finished product. So that raw material we intend to use, if I intend to produce 1,000 units of a particular product, that's a finished product. This is a finish. That's production unit. Now, I must know how many units of raw material am I going to use to produce this 1,000. So you should know, that is what we are trying to say here, is that the material usage budget, it is a budgeted quantity of raw material that is intended to be used to produce the finished product. And how do you compute for the direct material? Direct material usage budget is equals to, like I say, production unit times the material usage per production unit. That is that. That's how to compute that. Then number 4 is direct material purchase budget. Direct material purchase budget is a budgeted quantity of raw material in quantity or in value that the management intends to make purchases. What is the number of quantity, both in value, that we intend to purchase, both in quantity and also both in amount. So we have to know that. And how do you compute for that? The direct material purchase budget equals to material usage plus closing inventory of, please, here is for raw material. RM is raw material minus opening inventory of raw material. So we call it the direct material. So let's assume, remember, this is our product. So let's assume our raw material are XYZ. X, this is X, Y. Okay, let me just